Thank you, and thank you for all attending the talk. I'm going to, you've heard a lot about mining resources, and I think earlier today some biotech, so we're going to take you back towards biotech and life sciences, and in particular I'm going to talk all about breast cancer. Some 500,000 women this year are going to die of breast cancer around the world. Thousands of those are going to be in Australia and New Zealand, very sadly. Breast cancer is not going away. It's actually becoming more epidemic now across Asia, and the rates of breast cancer are forecast to double over the next 10 to 15 years for various reasons, around diet, lifestyle, number of kids, and so on. As per the introduction, I've been working in breast cancer detection for about 25 years now. So really since my PhD, which is the foundation to this work, I've been focused on this in Oxford and now in Wellington, New Zealand, where the company is based. We started in 2009 in Wellington, and we've now got 40 FTEs, 25 or so in New Zealand, mostly engineers, R&D, admin and finance. And then we've got 15 sales staff overseas, really run out of Nashville by our Chief Commercial Officer, Mark Coniger. Just in terms of where we are at the stage of the company, we've got a great sales team up and running, we've got revenues, we've got all the clearances, and we're now on the kind of the sales ramp. And the big question for us now is how quickly and how fast we can get that sales ramp moving. Since launch of the product, we've sold around $9 million US dollars worth of software around the world, installed in about 35 countries. We're about to go into Iceland, Mongolia, so that will soon be up to 37, 38 or so. Over the last year, we've had quite an amazing year. We listed in April 2016, and we transformed the company from a capital sales company to a software as a service company. And I'll show you some examples of how that's impacted the business a bit later. We've built a whole new sales team in the US to go more direct, and we developed a new product, which again, I'll give you a little snapshot of. But yeah, most importantly, if we come back to the numbers, we've had 600% growth over the last year in terms of annual recurring revenue, and a 45% increase in total contract value signed. So very nice growth over the last, in FY17, and we've seen that in the first quarter of FY18 as well. So let's just go back to kind of what we do as a company. Breast cancer screening is done using X-rays. So we're big fans of screening. We're utterly convinced screening saves lives, but there's better ways of doing it. Screening then is done using X-rays, and the breast is compressed between two plates when the X-ray is done. All these things, compression, dose, density, positioning, all equate to image quality. And the better the image quality, the better the mammogram, and the higher your chance of detection of breast cancer. So our job as a company is to try and help imaging centres perfect all of these measures. So if we just go through these: breast compression. The breast is compressed to stop it moving during the imaging. So if the woman moves during the image is blurred. So you want to compress the breast. Unfortunately, if you compress it too hard, the woman feels so much pain, she never comes back to screening, okay? But if you compress it too soft, she walks out the door going, well, that was a great exam. Unfortunately, the image is crap, and she's had a very high radiation dose. So there's a real balance there that needs to be dealt with. Radiation dose, you need a high enough dose to get a good image, but you don't want a high enough that it actually starts inducing cancer. But breast positioning over here, again, there's no point doing an X-ray if you miss tissue along the chest wall, and that's where the cancer is. Okay? So you want all the breast tissue on the image. And then finally, again, much more important now around the world, is the amount of white stuff in the breast. The more white stuff you've got there, it's glandular tissue. The more glandular tissue you've got, the higher your chance of developing breast cancer, but also the higher your chance of the cancer being missed at screening. 32 states now in the US mandate that a woman must be told her breast density after every X-ray screening. In Australia, women are not told, and there's a few women around here in the audience. Next time you go for screening, ask them afterwards. what is my breast density and how good was that screening for my kind of breast? You might be surprised by some of the answers you get. So our software, we started off, we are a global leader in breast density assessment, over 180 papers now. And this is this is our patient scorecard. The C means this woman's got a dense breast. You want to tell her that mammograms are good for her, but she might want to consider having ultrasound done to add on to that to get to really good detection of cancer. And then July last year, we kind of morphed from just being a density company up to being a cloud-based company where all the data flows in and the breast imaging manager can log in and she can start to compare radiation dose by X-ray machine, radiation dose by technologist. She can look at each technologist and say, you're over-compressing the breast, you're under-compressing the breast, or you're not positioning the breast properly to get a good image. Okay? All hard, quantitative numbers which are easy to talk to the staff about. So we've now automated breast density, cancer risk assessment, image quality assessment, radiation dose monitoring, the comfort, but also productivity. And all these things then improve the standard of care for the women, which of course is kind of the prime aim, but also they actually reduce compliance costs and they can increase revenues for sites. So there's the medical benefit and the financial benefit, which is key when you look at markets such as the US. Some of the big drivers, and again, we are a very US-focused company. 95% of our sales are in the US. The FDA is pushing image quality, that's the EQUIP program. The US is pushing sites now to prove that they're doing quality work, not just quantity work. State after state now in the US is stating women must be told their breast density, and there's a federal law underway. And of course, at the end of the day, breast imaging managers are being driven by money and they want to decrease costs and improve revenues. So some very big drivers here for our products. We are at least now, we are a software as a service company. Fundamentally, then that comes down to charging per woman. And sort of typically, we're getting between $2.5 and $5 per woman, depending on the volume at each site. Our average sale is basically around $50,000 to $60,000 US per year, and that is for our cloud-based quality assurance program. And we estimate the market to be around $1 billion globally. So again, over the last year, this time last year, we were relying on GE and Siemens to sell. I think most people know the Nanosonics story. They were relying on GE and Siemens to sell. The big companies are great to work with, lots of validation, but they've got their X-ray equipment to sell, and your software is just an add-on to that. So we've gone much more direct, and as you're going to see in a minute, we've started to get real traction now in the market in the US. Commercial team run out of Nashville, aided by our Chief Commercial Officer, Julian, over there in San Francisco. And I'm just going to note, we're getting much more bullish now about Australia and Asia, and about 50% of our deals so far this financial year have been in Asia and Australia. So we just got recently, Sydney Breast Clinic brought the product, and another sale into Adelaide, and there's multiple more sales around Australia coming. And that's all down to Anton's great work based out of Melbourne. We do have a very targeted market. There's 8,500 sites in the US. And we've kind of broken them down to the ones we believe have quality issues or want to assess risk and so on. And we're really targeting these guys. Okay, let's kind of move on to the numbers then. This shows the last 2 financial years and the first quarter of this financial year. So the dark blue is FY 2017. So we listed around here. We launched a new product here, and we got a new sales team here. And you'll see as the sales team has kind of come on, the dark blue sales have really started to go up very significantly. Very pleasingly then, this is where we are for the first quarter of FY18. That's from April to today. So we're seeing very significant growth this year compared to last year. And yeah, all our forecasting is suggesting that growth is going to continue throughout the rest of the year. And you know, our plan for this year is to see over 200% growth in annual recurring revenues. And again, very pleasingly, just total contract value rose 45% year on year. This is it. This is our numbers for the last financial year. Looking at annual recurring revenue. Again, you see like the real ramping up here as the product. We start to get reference sites, people using it. But also the sales team understands it and gets out there and starts getting through the budgeting process and so on. This is the number of images that we've now got stored on the cloud. So we're approaching 800,000. Those images are important to us, not only to kind of indicate to the market the amount of uptake of the product, so we're about 1% of the US market, but also those images represent a huge amount of data that we can use for product development. So this is a great resource for us going forward. Now, at the start, we talked about the company started off as a capital sales company. So we would sell breast density. That would typically be $50,000, and that would be the end of the money, basically. We wouldn't get any more money from those customers. So in 2016, we were almost entirely capital sales. Last year, we moved to software as a service, so almost 71% recurring revenue rather than that one-off. And this year so far, it's 94% recurring revenue. Okay. So rather than getting $50,000 as a one-off, we're now getting $50,000 per year. So this is very significant upscaling. I'm just going to mention a couple of numbers here which kind of do confuse people. Our revenues actually dropped from 2016 to 2017, despite our total contract value going up by 45%. That's because once you become a software as a service company, you can't recognise revenue until you've delivered the service. So, for example, if we got a $100,000 sale in March of 2017, we'll be recognising that over the next 12 months. And we can't recognise it in 2017. So the little graph down here is designed to show you the amount of revenue we've already booked for the coming years. That's quite a shift for the company, and I think it's quite a shift for investors to get their heads around. We've also moved over to the IFRS 15, which is the new accounting standards coming in. We've chosen to adopt early because we've just done the switch to SaaS. But you're going to see a lot of companies start to get very confused on that switch over the next few years. Just in terms of the team, we've got no plans to significantly increase expenses. We've got a great team in place, and we believe we can get very significant growth over the next year with that team. This is cash in the bank as of end of April. We are on the way to doing another 4C at the end of July. And you're going to see the cash has obviously come down, but not by a huge amount. And you're going to see again, real ramping up in sales and cash coming in. So we've got enough cash now for between 18 and 24 months, depending upon sales, obviously. The share price, obviously, we peaked around here, and we did a raise around here, 60 cents. We had relatively little news flow in here, but also we had overhang we had a lot of escrow shares coming out. They are all out now, and very few people actually sold, which is a good reflection on the long-term nature of the shareholders that we have. Looking ahead, we're going to move into benchmarking. The site in pink here is actually a site down in Australia, in Melbourne. So effectively, we're going to be telling them pretty soon Out the 14 sites we've evaluated, they're number 2 in terms of quality. At some point, we'll bring in some of the Brisbane sites as well, so we can start telling you guys which ones you should be going to. We believe risk assessment is going to start to accelerate density sales. For us, the market is the US, but this was a big article in Australia early in May, all about breast density. And is breast density going to be as big as the Angelina Jolie effect? I actually believe it's going to be bigger, and you're going to see that over the next few years play out. Yeah, some milestones coming up. The UK has evaluated Volpara density to all the competitors and chosen us to move into an implementation project now into the National Health Service Breast Cancer Screening Programme. And we expect to announce that formally over the next few weeks. We're doing a lot of work on cost of good reduction, online demos and so on. And then right down the bottom down here, which is really what I started the talk with, we're forecasting annual recurring growth this year in excess of 200%. And we want to move from helping 1% of the US women up to 3% of the US women. So, just summarising it, we're a company focused on breast cancer from a work originally at the University of Oxford. We are selling a unique cloud-based product into a big space. We've got a great dedicated US sales force, and we're seeing very significant growth across the US now, total contract value, and now kind of, which I personally like to see, increasing sales across Australia and New Zealand. We want to start helping the women around here and not just the ones in America. That's it. Thank you.
Thank you, Ralph.